When it comes to investing, people of all ages really just don't have enough education on how to invest, the best strategies to take, and in general, just what to do when you want to get started and what to do when you want to preserve and grow your capital. When I first started learning about investing, I was so shocked that financial literacy is not taught because it's so easy once you just get started and start going down the rabbit holes of how do I grow my money, what are the different sources and avenues to be able to do that, and just getting that curiosity of what can I do to make my future self in a better financial position, whether that's for yourself or your kids or your family in general. There's so many ways to just set yourself up for the future that if you just put in a little effort and a little time into learning how to do so, it becomes really easy. Anything I say in this video is not financial advice. I'm simply sharing the steps that I've taken. I am currently 23 years old, and so I just think it's a good time in my life to share what I'm doing because I'm always trying to learn and grow myself. And I think people talking about finances and just investing in general is honestly what we need more of, because it's not about listening to one person or just blindly following someone. It's about hearing differences in ideas and different strategies and seeing which of those strategies work best for you and which don't, and then kind of creating your own strategy based off of other people's ideas, your own ideas, and your goals in general. With that being said, the first step is to ask yourself one question, and that is, what is the goal for your future? And the way that I went about answering this question for my own self was simply closing my eyes and just thinking about, what is my dream life in the future? What does that look like? And what do I need to do to get there? And also understanding how much of a role money plays into your future. What I specifically mean by that is some people's dream life is to live on the beach. For example, that's one of my dreams. And so that is a very costly dream, and that requires very large amounts of capital because everyone wants to live on the beach. And so understanding that I have to make a lot of money, invest a lot of money to be able to preserve and grow enough capital to live out that dream is something that it's important to think about as soon as possible, because the bigger the dreams, the bigger the planning and success, honestly, in general, it just takes to be able to get to those dreams. And so people think about their dreams their entire lives, which is amazing, but you're no further ahead than the person who doesn't think about their dreams at all if you don't take any action. And so that's why it's super important to not only think about what your future life looks like that you really want, but also thinking about what steps can I take today, tomorrow, and every day going forward to get myself closer to achieving those results. And I completely understand that everyone comes from different backgrounds with different levels of success, failures, hardships, and because of that, you have to play out your life in the most advantageous way possible. What I mean by that is I compare life to like a game of poker. Everyone is dealt a different hand, but it's not about the hand you're dealt, it's about how you play those cards. And similar to poker, you can have really bad starting cards, but you can use the board and other things in your life to improve your hand, as well as fake it till you make it and put in the work to grow your stack of chips. And I think it's a really nice analogy because it's not about where you start, but it's about what you do with what you have, whether you have an abundance of resources or you're really on the struggling side. And you see stories all the time of people from both sides of the story, whether they're struggling and make it to success, or people who have a little bit more privilege in their life and also are able to continue success. And whether you're on either side of the coin, it's really about understanding the fact that you need to take action no matter what to get to where you want to go. And it's about putting in effort and consistency. If I could define success in investing as one word, it would simply be consistency. And that's obvious with strategies such as dollar cost averaging, which I'll talk more about in this video, as well as just continuously doing more research, understanding new strategies, and just trying to take in an abundance of information to allow your decisions to be as informed and successful as possible. Now that I've talked about the mindset you need to adopt to get to where you want to go in your investing journey, as well as just your personal life in general, now let's talk about some important investing strategies that I started out with that have helped me go down the right path within my first few years of investing. The first phase of my investment journey was actually just trying to gather an abundance of information from friends, family, as well as people online, documentaries, just anything I could find of information of value. I really looked into it, just doing a ton of research and trying to educate myself on what the market is, how it works, cycles, all of those things, because it's super important that you understand the factors that play into how a market operates, what causes inflows of cash, exits of cash, market pumps, dumps, all that stuff. It's super important to understand how the market works to the best of your ability, as well as what stage of a cycle you're in. And that's especially relevant if you want to invest in cryptocurrencies, even stocks as well. And you'll see a ton of volatility in the markets, and that's actually a time to take advantage of it. And an easy example of that is Anytime there's been a market crash going back all the way to 2020, those have been the best buying times. And in 2020, I actually did not invest enough because I was looking at the market in a fearful manner because I didn't have enough information at the time to understand the fact that when the market goes down, it's often a lot of news based fear. And as a result, that causes an inflow of sells, but that's actually the best time to buy. And so I've completely rewired my brain to think when the market goes down, I'm actually greedy and excited to buy more. And when it goes up, I actually get more fearful and think about selling positions. That's more so for trading. However, for long term investment strategies, I never think about selling the long term positions, even if the market's going up. This is because a lot of my strategies are long term and are actually taking advantage of things such as compound interest, where selling in the short term would actually be a foolish mistake. After I spent a lot of time looking into the markets, just watching the charts in general, and following a ton of financial news to get an understanding of how the markets work, I then began actually investing. So I started investing in individual stocks because I was looking at companies that I saw a long term value in. And in addition to making sure that they had strong earnings, I really asked myself one question: do I use this product, or do I see this company having a long term use based on the trends that I'm seeing in the world and kind of just where the market is going in general? And if I felt strong enough to say yes and that I see long term value, any stock that I saw was an easy buy. And while this strategy may not seem as fancy or as detailed as others, it works really well. An easy example is recently I've been buying a ton of AI stocks that I think are going to integrate well with the high demand for chips, data centers, all those kind of sectors. Energy as well. I've been doing a ton of research and I've had massive success doing so because we're in a wave of AI right now where everything is being improved by AI. And so if you can find the right companies to allow AI to benefit from, you can make a ton of money in the market. Not only have I been heavily investing in AI, but I've also been using AI to help me with investing. And what I mean by that is I asked ChatGPT to give me a list of stocks at every layer of the infrastructure that's going to be beneficial as a result of the inflows of money being pushed into AI. And so it gave me data center companies, it gave me energy companies, it gave me chip manufacturers, literally like a tier by tier list of companies. And I put my money into a few of each of them that I thought were the strongest and had the best long term outlook. And a number of those companies have gone up over 50%. And this strategy did not take a ton of time, a ton of brainstorming, research, all that. I literally gave ChatGPT a really good prompt and it spit out the companies, and I simply just asked them to kind of vet them. And then I did my own personal vetting, and then I put capital into each of the stocks that I thought was a strong buy. And this worked out really well for me. And this is just an easy example of how a quick thought in my mind turned into a great investment strategy within minutes. And this is why it's super important to use all the resources you have, whether that's a friend that you know invests, a family member, or even AI now that we have that. You don't even need people anymore. You can literally talk to AI and get so much information in seconds, and even have bots be working for you and getting information at a much larger scale, almost like a mini business you can run just to get as much investment information as possible. Once you feel like you're in a really good place in terms of understanding the markets to the best of your ability, as well as defining a simple strategy that you want to follow, it's time to execute. For me personally, the few strategies that I've adopted are short-term trades, long-term consistency in terms of buying a specific amount of money of an ETF each month, as well as looking into companies and investing into companies that I believe are going to be here for 10 to 20 years plus. And these investment strategies are working for me currently because I'm trying to build a portfolio that's not only going to be here tomorrow, but also 20 years from now. And my goal is to not sell the majority of these stocks and just let them compound, whether that's via their dividends or just the returns in general, because that's where the true money is made over the long term. And time is the most important factor when it comes to investing, as well as obviously picking good companies. But the cool part about that is if you invest in a ton of companies and you weed out the bad ones over time, you're left with a ton of strong long-term compounders that can make you a ton of money and help you achieve your goals. Based on your strategies, it's important to understand how you're going to execute those, whether that's on a daily, monthly, or semi-annually basis. Right now, my investments look to be about 2 shares of an ETF each month, as well as I'm buying individual stocks on any dip that I see and trying to just balance out my portfolio to be strong in multiple sectors. This is a pretty safe approach because it will allow your portfolio to be very balanced out in terms of the fact that your ETF inflow is going to be strong, mitigating any downside risk if there's a lot of market volatility in one sector, because it'll be balanced out by the ETF having, inflows of cash in other sectors. And so every month my ETF presence continues to increase. And then if I find other good companies outside of that ETF, I'll simply buy those companies, but they'll be a smaller weight compared to the weight of my ETF in my portfolio. So it really just helps push the scale up when the stocks are green. But if the stocks go down, my ETF presence is strong enough where I'm not losing a ton of money percentage wise in a short amount of time because I'm just protected in that way. And the way I've structured my portfolio is pretty much on par with my risk appetite. However, I am very comfortable taking risks, which is why I'm investing in a ton of AI companies, some of which I know won't be here in 10 years. But that is because I'm just going to weed out the bad ones, as I mentioned earlier, and just continue to buy more of the strong ones as they continue upward. And on that note, I think it's important for you guys also to understand the fact that it's not a bad thing to be wrong. And what I mean by wrong in this case is pick a stock that goes down, because there's always a lesson involved. And if you think you're just going to pick a bunch of stocks and they're all going to go up, that's highly unlikely, almost impossible to be honest, because even the best companies have red days, and you're just going to pick some losing companies, especially if your risk appetite is higher and you're buying newer companies that are not as established within the market. On the flip side, buying some of these newer AI companies or just newer companies in general have a lot of upside potential as well, because they're just a new company starting out and they're still growing and they haven't actually realized their full potential as a company within the market. And if you position yourself early enough in one of these stocks, you can benefit massively from the upside gains. Once you've solidified your strategy and have begin buying stocks and sticking to your plan, the biggest thing from here is simply just don't deviate from your plan, stay consistent with it. And I don't mean that you can't adapt your plan and change it, but what I do mean is that don't forget to invest in a month if your plan is to buy X amount of shares of something per month, because that's where the mistakes are made. If you just fall off your plan, eventually you may not stick to it at all. It's similar to working out or just anything in general. You have to make this a daily, monthly, weekly, whatever it is for you, you have to make it something that's a non-negotiable in your life. If you really want the goals that you have set forth and that you thought about earlier in this video, and you want to achieve those goals in the future, you have to take this with the utmost amount of seriousness, because everything you do today will have a future benefit that's going to help you get closer to your goals tomorrow and every day going forward. And so if you ever are thinking about not investing or doing something with the money that you were supposed to invest, maybe put it into something that's not as smart, such as like a bad purchase that you're just going to regret in the future, think about your future self and your current self and how you'll be so disappointed if, when you're older and you're retired, or even in 10 years, say, you're like, man, I really wanted to achieve that goal and I actually had the right plan, but I bought some stupid stuff and kind of just fell off the wagon and just gave up basically. Because I know for me personally, I really want to achieve all my goals. And so I take this with the utmost amount of seriousness, because I really want to get everything in life that I want to out of it. And since we only have one life, why not go all in right now? And because of that, I've stayed very disciplined now ever since I began my investing strategy, where I do not miss my monthly inputs into my ETF, and I continue to scan the market for companies that the stock price goes down and I think it's a good price to enter at. And this has allowed me to catch a ton of great dips in the market and actually just improve my entries on some stocks, as well as find some amazing stocks that have absolutely skyrocketed. There's something simply about showing up that just provides a ton of benefit. And I believe that if you just put in the time and show up, you'll actually catch a lot more luck in the market, because you're going to be there on those days when things dip. Whereas someone who only looks at the market maybe once a month, they don't see all the great opportunities, because the odds that you just check a chart one day and it's the great perfect time to buy is such low odds. But if you're checking the market at least a few times a week, for me, I check daily because I'm really into this stuff. But if you just check it a few times a week, you'll find a ton of great opportunities that the average person would just let fly over their head and they'll just miss it. So I highly recommend staying into this, staying aware, and doing the best based on what works in your life and finding a balance that's right for you, because there's a ton of great opportunities and you just have to be there to find them. And the final part of this is, once you have the strategy and you know you're sticking to it, simply just watch what happens, enjoy the ride, and make tweaks as necessary to optimize your approach based on the failures you make and also the successes that occur. That's kind of what I'm doing as well. Anytime I see something that I do that works, I continue to maximize that. And if I see a strategy that's just not working for me, I reduce my input into that strategy. And from there, all you have to do is sit back and enjoy the compounding and let the market do its thing. For all the people out there that were too scared to get started or just didn't know enough about investing, I hope this video helped you in some way. I've been super fortunate to have a ton of people around me who really talked to me about investing from a young age, and that kind of sparked my interest and kind of led me down my own path. And so I hope that this video allows someone else to kind of feel that same way and get started on their investment journey. And there's no better time to start than right now. No matter how old or young you are, getting started puts you way ahead of the average person, and it can help you achieve your dreams. So with that being said, thanks so much for watching, and I'll see you guys in the next video.